Hi, I'm Seth Freuberg. I'm the Director of Options Training here at SMBU in Manhattan. I'm also the head trader of SMB Capital's Options Trading Desk. So I'd like to continue today the discussion we had last time about the top qualities that we're looking for in folks who are going to trade on our trading desk. And this came about as a result of an inquiry from our head of recruiting here at SMB, who asked me to lay out what we're looking for, what we're not looking for in a trader, so that he could sort through the resumes a little bit easier. And so what I did was I put this list together, and I realized that the categories broke into, the questions I would ask break into two categories. One is you don't have the right experiences quite yet to trade on our desk, or you've just gotten lucky. In our last session, we talked about the experiences you need to be on a trading desk. And I don't want to reiterate those now, but there were 6 points that we talked about in terms of experience for being on a trading desk. And today, what I'd like to focus on are those traits which would seem to indicate that it's possible your trading records are strong, but you might have just gotten lucky. And so let's drill down a little bit deeper into what I mean by, did you just get lucky? There are 4 questions that I would ask to try to sort this out with an incoming trader. And the first one is, does your strategy primarily involve selling naked options? Now, a naked option is an option in which you sell the option, or another term for it is you write the option. And it's sort of binary. Either the option is worth something at expiration, or it's not. So if you sold a Google call for 1,500, I'm not sure what it's trading at right now, but it's not 1,500. If you sold a Google call for 1,500 and Google on the expiration of that option was at a price lower than 1,500, then you got to pocket that call premium. Well, in the case of some traders, they'll trade way out of the money options, a way out of the money call and a way out of the money put. They'll sell those, and 9 times out of 10 they will expire worthless. And if you did this during a short period of time, you might think this is like going to an ATM machine, you can't lose. The problem is the day the market does in fact gap in or into and put your option into the money, you will lose most likely all of the profits you made for many, many months before that. And so if you sell naked options way out of the money, you could think you're a great trader when in fact you've just gotten lucky. So that would be something I would focus on, and would be a little bit of an adverse point if I was looking at someone's resume. The second thing is your primary focus weekly options? Now, the reason I'm bringing up weekly options is that they are kind of alluring in that you can make money with a weekly option strategy for 5 or 6 weeks, being in and out of the trade in a couple days, hitting your target, and thinking this is the greatest thing you ever discovered. You only have to work 2 days a week. You put the trade on, you take it off 2 days later, and then you just go goof off for 5 days. So you have a 5-day weekend and a 2-day week. Unfortunately, if it was that way, everybody would quit their job and have the 5-day weekend and the 2-day week. But the truth is that when you trade weekly options, you can get on a winning streak 5-6 weeks in a row, and all of a sudden the market will take a big move in one direction or another. The strategy you're using most likely cannot handle a huge gap, and you'll give back most or more than you ever took in from the previous 5 or 6 weeks. So now that's not to say you can't make money trading short-term weekly options. There are people who do, but most people who I know who have attempted these weekly option strategies, you hear about them a lot until all of a sudden you don't hear about them at all. and that's often because the strategy blew up on them. So that would be an area of great focus for me. If I was looking at someone's resume, that wouldn't necessarily be a positive for me. A third thing I'd be looking for is, have you only live traded? Now, that sounds funny because you might have expected me to say, have you only back tested? But no, I said, have you only live traded? And the reason I say that is, there are people who can trade for a short period of time, 6 or 7 months, using a particular strategy. And they come in with a tremendous amount of confidence because they have made money on that strategy every month. The problem is the possibility that they may not have yet encountered the market that is so adverse to that particular strategy that they will never be able to recover from that kind of a market. And so how do you find out whether your strategy is prone to a market that you have not yet been exposed to? And the answer is you backtest. And I'm a big believer in backtesting, not that it's necessary, not that it's sufficient, I should say, to backtest. You're not a good trader because you've developed a good strategy in a backtest. You're a good trader because you developed the strategy in a backtest, and then you, in fact, traded it successfully afterwards. But you may not have been exposed, as I say, to the problematic periods for that particular strategy. You'd pick that up in a backtest, and it may be that the strategy is so weak under certain market conditions that it's not really a valid strategy, and you don't know that yet. So until you've backtested, you haven't really proven that a strategy can survive and prosper in many, many different kinds of markets. So what I will often do with a trader who I have a good feeling about is I'll say, okay, those are great results. Now let's backtest that 5 years to see how it would have been done, how it would have done in various other markets. And if the answer is really would have done well, then that helps their candidacy for our trading desk. And then finally, have you been only trading your specific strategy for, say, less than 18 months? And the reason I say that is very similar to the previous point I made. If you've been trading a strategy for 9 months and you're doing well with that, that does not mean that that strategy will do well in all markets. So I like to see typically someone trading a strategy for multiple years. But more important than multiple years, I like to see them trading it in years that are fundamentally different from each other. Channeling years are usually going to be pretty good for our style of trading. But what about a year like 2016, where we had Brexit and a U.S. election and the price of oil falling off the end of the earth at the beginning of the year and so forth? When you have such market shocks like this, then those are going to be more challenging years. How did your strategy do during a period like that? I know personally when I'm doing backtesting, I'll immediately go to a month that I have a feeling for the strategy I'm looking at might be challenging for that strategy, or I'll look at a year like this year has been to see if it can hold up against, in a reasonable way against a difficult environment. And if it does, you probably have something. If it doesn't, then you need to work on the strategy and redesign it so that it can handle lots of different kinds of markets, not just one particular kind of market. So those are the 4 things I would say are in the category of it's possible you just got lucky. So I don't want anyone to watch this video and get discouraged and say, well, of the items that were discussed, unfortunately, I've got, I'm doing 8 out of the 10 of the things that you shouldn't be doing, something like that, or that make your application seem weaker. Let's put it that way. And I don't want you to get discouraged. Number one or 2 adverse answers to the checklist I just gave you does not mean you could not make it on our trading desk. It just means I'm going to look a lot harder at your resume. But the second thing is there are workarounds to these things. For example, if you primarily trade weekly options, well, no one's saying you can't trade weekly options at all, but why don't you introduce some longer term strategies into your portfolio of trades? Or if you've only live traded something for 6 months and haven't backtested it, well, go and backtest it. and then present me with the results. And there's a chance that we're going to feel really good about the process and the strategy, and you as a trader for us once we see that back test. So there are, of course, solutions to these things. There's another reason I shared this list with you today, and that is that even if you never apply for a trading desk, you need to ask yourself, am I a good enough trader to increase my capital level? What's the essence of trading on a trading desk? It's that you are being given capital by a capital provider. In our case, you don't have to put up any capital at all. You are simply asked to trade our capital wisely. So if you are never going to trade for a prop firm because you have enough resources to trade for yourself, how do you know when it's time for you to increase your capital levels? Well, if you answered adversely to a number of the questions I've raised over these last two videos, then the answer is you're probably not ready to increase your own capital level. If you've only traded something for 6 months and you haven't backtested it all, you can't go from trading $10,000 in capital to $300,000 in capital on that same strategy just because you've made a certain amount of money on a $10,000 capital level. It doesn't work that way. You need to have a lot more information to trade at the level of a six-figure kind of a capital base. So therefore, what this list can help you do is to be essentially a reality check for you as to have I just gotten lucky, or are these in fact sound strategies? I better go back test, or I better at least at a minimum trade at the same level of capital for a while before I can get to the point where I can say, okay, this thing has met the test of time, this strategy has weathered lots of different storms, I'm ready to start increasing my capital level in it. So this checklist that I gave you over the last two videos hopefully can serve as basically a self-analysis checklist. Am I doing all these things? If I am, then I need to take a look at ways of modifying my approach or doing some more work or more study to understand what I'm doing before I can increase my capital level. So I hope that this checklist has helped you to understand not only how to apply for a trading desk like ours and what experiences and characteristics you need to have, but also to help you to analyze your own personal trading and improve it where necessary. Thanks very much, and we'll see you next week.